Alright, guys, let me know if I am audible or not. There might be a bit of background noise, but you'll have to bear with it. Alright, I'm audible. Alright. Start talking about the market sometime. Get more people to join in, and then we'll start. Meanwhile, if you have any questions, you can put it on the chat box. Also, there might be a bit of latency, so I might respond to your question maybe sometime after you've posted it. So please understand that's because of. EIH Limited. All right, give me 1 minute. Give me like 1 minute, then we'll start with the discussions. All right. So EIH Limited, Senco Gold. I think you're talking about Senco Gold. Let's just um, let's just start with EIH. So looks like it is breaking out, but not a trade for me here, right? Because I usually do not buy stocks when they are dipping into some sort of demand, right? So let's say if there is a dip down and the stock starts to just go up like this, I do not buy this because when the market turns bad, um, you will see stuff like this happening. Let's take an example. When the market turns bad, the dip will start to fill. So I'll find an example. But the entire point is, let's take this example. So when the market turns bad, stocks will form tops, right? So when this happens, um, you are not prepared for the first top, right? So maybe if things are already broken on the downside, you are prepared for it. But when it happens for the first time, if you buy straight out of a dip, So let's say a stock was going up nicely and now it has pulled back. And now when it goes back up, the market is starting to form a top, right? So if you're buying straight from a dip, you are usually entering around a high, all right, because you're buying after a move up, you're expecting it to break through. But when it forms a top, you are entering at the highs and then the stock does this. So basically in this entire move, you are entering and exiting at the extremes. So I do not buy this, right? I will wait for it to pull back and then I will buy a higher low. If it just goes up straight, all good. There are thousands of stocks in the market. You entered Senco Gold yesterday. So the reason I did not take this was because Nifty was closing like this, right? So Nifty was at this low and Nifty was closing here. Nifty also tested out this area of supply. So if you see here, this area of supply was tested, and even after testing that, it started to push to the low. So this is why I did not buy Senco Gold yesterday. But if you had bought it, good enough, no problem with it. But what I would suggest is be aware of the markets. All right, uh, do not buy in when the index is starting to fall, because you never know if it just gets some demand around the lows or it will just gap down and start moving down, right? So always have a sense of the market. Even the small cap index, if you see, this is not good, all right? In no shape or form is this price action good. This was the last fall. This was the supply for the fall. Again, if you are not aware of the supply demand thing, you can obviously go back and watch any of my videos, right? I have an entire video on supply and demand. So this was the breakdown. Obviously, this demand zone is gone. This base right here, this is gone. The last base is broken. And then we pull back up to this area of supply. And now we are pushing down again. So in no scenario is this good price action. All right. So when this sort of a scenario shapes out, always just wait for the supply to get taken out before you start buying stocks again. All right. So do not buy stocks when the index is pushing below through the supply. Nifty looks bad. And even there was a gap down. So Nifty was down 100, points in the morning, right? It was down 110 points in the morning. So don't buy into these days, right? Always just wait for the index to just start going back up. It's not, see, the main point is you need to be avoiding this market, right? You can avoid it completely. You can maybe um, take trades on the pullbacks, but when this sort of a market is playing out, you cannot sit through a move, right? Because there will always be some sort of random pullback where things start to fall. So pretty much always wait for the market to start going back up. It forms a bottom, starts trending, it continues for a while. It continues for 1, 2, 3 months. In this period of time, you try to maximize your gains. But as soon as it breaks something, just try to sit out. Even if the chart looks good, trust me, you will do better by sitting out, because out of 10 good looking charts, only one will move, and that will also pull back from a supply. So something like this would happen. See, this was a good looking chart. I bought it today, and just from the next supply, so this supply trying to uh, trying to take out the supply, and immediately from the next supply, it is down like 5%, I think 3, 4, 5%. So now I obviously exited around the supply, but let's say tomorrow it gaps down, market goes down. So this entire trade is wasted here, right? So always be very mindful of the entire market structure. the broader market, because won't move stocks won't move against the broader market, right? But still, if you're holding it, that's good enough. Adani Enterprises, all right. We talked about Adani stocks. We talked about Adani stocks being extended. There is even uh, a prediction here. So this was extended here. You gap down on news day, which is over the weekend. There was a news. You consolidate and then it starts to break out. So pretty much the normal exercise, right? For those people who are already aware of how we trade. This is a textbook exercise which plays out all the time. So if you bought it somewhere around, let's say 2500, you're good. Don't buy it now. Now it has entered this supply. So this entire area of supply, now it has entered the supply. So might pull back. It might go up as well, but this is not a proper entry point. All right. Don't enter here. All right. ITD cement hourly chart. So if you are mentioning hourly chart, I think there's already some extended behavior. Yes. So if you see it's already extended, so don't buy this. Looks good in good on the chart, but look at the gap here. It can simply gap down into this demand. Even if it's basically as extended as possible. All right, because if you see, it's also far from the immediate demand. Forget about the 50 DMA. It's also very far from your immediate demand zone. So don't buy this. Might break out, but it's not worth it. Right? Don't buy this. CG Power, I think CG Power looks kind of okay. No, so no entry for me here again. Even though the test of demand was quite nice, it was a nice dip into this demand. But again, no entry for me because because it's simply just too far from the 50 DMA. So see, I have talked about this in the previous live as well, and you can look at it here as well. All big trends, they will start around the DMA. All right, we're already far from the DMA. Always, if you look at the big candles, so all big candles, they are happening around the DMA, and then it just slows down around the top. Again, it pulls back, big candle, then it will just slow down. So again, big move. Obviously, here there's a pullback, so there is no point. But all big moves, either they happen towards the end or at the DMA. So either the big move will happen towards the end when a trend is ending. There might be an exhaustion move on the upside, um, or they will happen at the beginning. In the middle, there is no big move. All right. So So the highest probability area is around the 50 DMA. Don't buy these structures. And also it will help you stay consistent. So if you're always buying at the 50 DMA, you're always buying into the same kind of setups. If you're buying far from the 50 DMA, there is no proper number to basically, you know, there is no proper number which you can refer to keep your trades consistent enough. All right. Some might, some might be 10% far, some might be 15% far, some might be 7% far from the 50 DMA. So there's a lot of variance that creeps in, right? So you cannot allow that variance as well. Um, the only condition under which this is justifiable to me is when the entire sector is quite strong, right? Other than that, I don't think I can justify buying far from the 50 DMA, right? So the same lessons again and again we talk about. So let's talk about the index first because I think people are here. So, so in the index today, actually, Bank Nifty is stronger since morning. All right, so Bank Nifty has been stronger since morning. And if you see in Bank Nifty, we have been talking about this weekly area of demand. All right, this weekly area of demand. And Bank Nifty is now at that area, right? It's now around this area. Also, if you see one more thing, there is a lot of volume on the up moves. So if you see this area, spike of volume here, these two candles right here, big spike. Again, today the morning candle, nice spike of volume, right? Here, if you see, there was a down spike, there was a spike in the volume on the downside, right? It was higher than all of the volumes combined, all of the volumes here. So this started a new downtrend, but in this area, the volumes are matching. All right. So I'm thinking there can be a pullback in Bank Nifty. All right. I'm not saying that you need to buy straight off the lows. I never said that. Do not buy straight from the lows. Always wait for the hourly base. So hourly base will be somewhere around 44, 300, 400 on the futures chart. All right. But don't go short here. Another thing is the global markets have already fallen a lot. So if you see US 100, this is down. This is also at the weekly demand low. So this is a very, very important area, very strong area as well. This one right here, very, very strong area. All right. We're trying to pull back, very extended on the hourly. So I'm expecting some sort of spike to simply just come up into the last supply because this is a very strong area of demand. Even on the Dow Jones, if you see Dow Jones, there is a breakout demand which is even stronger than Nasdaq, right? So this was the demand of the last range breakout, right? So if this does not hold, then it's firmly downtrending. All right, this is your last call right here in Nasdaq, in Dow Jones. So very, very important areas of demand uh, in the global markets and in Bank Nifty as well, the weekly demand which I talked about. So I'm expecting some sort of a pullback in the markets from here. All right. So don't go short here, but don't straight away take a long as well. We need to wait for some sort of a breakout on the upside, right? So you see this fall is also reversed. Actually, there is a demand zone around this area right here, which is holding the index up, right? So I'm expecting it to go up. Might not happen. Don't take a trade based on my views, but this is what I'm expecting right now, right? May happen today as well. We never know. Today is Friday, so might actually happen towards the end itself. All right. Do you ever take 1 minute entries based on 15-minute structures? No, I don't. No. Because see, I mean, I get your point. 1 minute entries based on 50. I think you're trying to do some intraday, but the point is 15 minute demand and supply zones are too wide for 1 minute. So let's say I'm looking at this supply. All right. So on 15 minutes, look at the size of the candle. All right. It's too big to properly trade this. It's too big. Right. So you have to be aware that the supply is at the highs. Because if this is an entire range, in the smaller time frame, it looks like a range, obviously. On 1 minute, this is an entire move. So the supply is at the top. At the lower part, there is no supply. So on the 15-minute chart, if you mark a zone, uh, let's just clear this out. So on the 15-minute chart, if you mark a zone like this, then there is no point, right? So 15-minute is not exactly important. All right. See, again, in this area as well, if you see, this is a move up, but the demand zone for the move is actually around these lows, this entire wick, right? So you might end up entering here, giving a stop loss, and then you see the market simply just goes your way. So you see it's also dropping from this high as well, right? Bank Nifty might be dropping as well. See, the structure is still bearish, so do not take a long trade here, but I wouldn't short here. That's all I'm saying, right? I'm not telling you guys to just go and buy up all Bank Nifty options because it can simply go down. So we are waiting for a nice break of structure here. Otherwise, it's still bearish. All right. Jai Shri Tea and Industries. All right, let's check this one. Okay, this is delayed because it's right. So I'm not sure what you are trying to buy here, but it is clearly in a downtrend. So another trick, or I mean, there is no trick about this, but just wait for the stock to go above the weekly EMA. All right. So this is a weekly 50 EMA. All right. Um, so if it's downtrending on the weekly charts, don't buy this. Let it just break through a weekly supply or something, breaks through this, and then you get in on the dip. Don't buy this area because there's just too much. You want to buy a stock when it's doing this. You can also use the slope of the weekly EMA. So if it's sloping down, don't buy stocks. All right, because stocks have to be trending up to move up. So don't buy stocks if the weekly EMA is sloping down. Hopefully that made some sense. Also, guys, if you haven't liked the video, like it, uh, like the live. All right, it helps with the algorithm. More people will join in. So don't buy Jeshri tea, right? Don't buy that. ABFRL again, nothing here. Not sure why you guys are trying to buy these stocks. There is no point. You want to get into uptrending stocks, all right? Stocks like, let's say, stocks which look like this. The weekly also, this looks good. So these kinds of stocks can break out, but something like ABFRL, it's not good. There's clearly no sign of an uptrend here. So just use the 50 50 weekly EMA. If it's sloping down, you stay away from that stock at all costs. Don't touch it. If it's sloping up, that's good. All right. API green. Again, I talked about this in the last live as well. I do not buy stocks which have just gone sideways. Right. This looks good. This can be good, but I want the stock to come out of a base like this. Some dip, some deep shakeout, something something like this. All right. It has to go deep. I'm not saying that if it has moved up like this, it needs to come down all the way. That is just a downtrend. I'm just talking about, let's say there is a move on the upside, stock comes down, and then there's a deep sort of a shakeout, and then we start going back up. Some shakeout, some sort of a long term pullback, some spending time around that area. See this stock as well. You look at this base. Okay, so this is dividend. Don't worry about this gap down. This is an entire dividend. So So you see, this is a proper pullback, but it's not downtrending, because on the weekly, if you see, it's still up. All right, sort of not exactly downtrending. Even if it's downtrending, this is where it starts to trend up again. All right, so this is an entire change of a weekly trend. So this is something which I would buy. All right, this is an extreme example because this is a very big base, but my entire point is don't buy short pullback bases. All right, because short pullback bases which haven't pulled at least one stroke uh, of a shakeout, they can fizzle out very fast, right? So buy some deep pullbacks when they come back up. Obviously, don't buy them immediately after they fall. Don't buy the fall, obviously. Why don't you use EMA? I use the EMA. It doesn't matter to me because I'm using it just as an area of value. All right. So EMA, DMA doesn't matter. DMA is the daily moving average. All right. So it's not a simple or anything. It's just a short form for daily. So don't confuse it. It's a daily exponential moving average. So DEMA. All right. So I don't use the EMA as a strict line. Right. So see, even though it breaks out of the EMA here, it's not an uptrend for me until the supply is broken, because EMA is nothing. Supply is actually leading to the fall. So I just use it as an area to judge if the zone is extended or not. So if the zone is extended, then it will be far from the EMA. So let's say this area right here, this demand zone, see how far it is from the EMA. So in this case, I will wait for a proper setup on the index, and in stocks, I won't even touch it. Why do I have to take it on the index? Because there is only one index. All right. So I only use the EMA to judge what sort of uh, how extended we really are. Right. All right. Gale India. Gale India again. It's falling down. I don't really see an entry here. Nothing here. I bought Gale somewhere here. I was out pretty early. So falling down right now. See again. It is in a pullback phase. So simple line chart, you will be able to see a downtrend. You want something like this. So nothing in Gale. All right. Smart Link Holdings. Again, nothing. You guys are missing the point. Um, don't buy these flat pullbacks. All right. Just wait for a dip into demand, and then it has done it previously as well. Look at this. This was a very flat area, quick dip, and then goes up. All right. Don't buy these flat pullbacks. It is not a contraction. This stock is contracting out of every 3 months, 2 months. This stock is contracting. Look at this. So do you really think this contraction is any different from this, or maybe something like this? So it's not a contraction if the stock is contracting all the time. All right. So wait for a nice dip and then immediately you catch it. So another example is this one. See, this was a very solid. So why did I buy this? Because it was at the highs and this was a much bigger base. All right. So it was not exactly going up, going flat, going up, going flat. It was a part of a much bigger base. So I bought this. But these sort of flat areas, they eventually, when they start contracting towards the upside, they go very far from the original demand. See, this is the high of the stock, and this is the original demand which made the high. So in this entire structure, you have to know that this is where the demand is actually coming from, and my contraction means nothing. This contraction means nothing. And this is why many people, even though they learn about VCP, it's not enough for them, because random VCPs will only work in a good market. So either you know when the market is bad, either you know how to follow the trend very well, right? Or you have to pick your zones very carefully. So let's say something like this. Um, See, this is also okay. Let's take an example. See again here. All right. Look at this entire area. So what is going on? This is a contraction. This was a contraction on the candlestick chart. But look at the area of demand. Demand is coming from this candle. All right. This candle led to the high. So if you're buying here, this is not a good trade. No matter how much you're buying right here, this is not a good trade. All right. It can work out in a good market, but when it does not work out, it will go straight to the demand. You have to be very, very quick with cutting a loss if you are buying a trade like this. And people are not quick with cutting losses. It might look like it's a very easy, you know, um, it's a very easy exercise. You just cut it out when, let's say, the internal lows start to break. So let's say when but these fall, when the stock falls like this, it's not happening slowly like it happens in Nifty. Small caps, they will drop 2% in one move, in one single, I mean, sweep. 2% is gone. This is February. Let's see if we can get a chart for okay, this CSB Bank, right? So this is February, right? So you cannot get the 5-minute chart on TradingView. So let's look at the chart um, on Zerodha. This is 27 January. Yeah. See, look at these candles right here. Look at this. This entire move, 242 to 235 something. All right, 3-4% goes in a flash, and it might not come back up. It has come back up because the stock went into demand, but these candles are big. This is a 1.5% candle right here. Again, CSB Bank is still a pretty decently sized bank. All right, this is not a true small cap. When you encounter a true small cap, you will know how fast things fall. All right, so be very close to the demand. Trust me, it will help you out in the long run. And do not buy random contractions. Understand why is the stock contracting? What is why is the zone holding? Understand the entire structure behind the stock. All right. Why is the stock holding this area? Where is the zone? This is the zone. Why did the stock pull back from this? Sorry. Why did the stock pull back from this area itself? Because this is the zone. All right. This is the zone which led to the breakout. So the stock pulled back up from this zone. All right. Why did the stock not pause here, even though there is an EMA? all right, because the zone is here. There is no zone at the EMA. This is the zone, and this is where the stock paused, and there was another high from the mark random contraction. Again, same thing here. Why did the stock gap down and then move up? Because the demand is at the lows, not at the highs. So there is no demand here because this is the high of the zone. There is a demand at the lows. So it gapped down into the demand and then went all the way up. All right, so understand these things because they are important. And also make sure that you are liking the video as well. All right. How much? Okay. Okay, we've missed a few questions. Let's just talk about some non-stock questions first, and then we'll take up stocks. What if it's setting up at the weekly demand? So weekly demand is basically a longer term commitment, and you are much more exposed to the market volatility. Let's say this stock. So it is setting up quite nicely at the weekly demand, but it's quite far from the EMA, which is, let's take this example. This area of weekly demand. So this is your weekly demand. Let's say dip down all the way and then it's set up. So if you're buying here, it might move immediately, or it might stay around this demand for some time and then go up. So why did it move immediately here? Because the market was trending up, right? But why did it not move immediately from this demand? Because throughout this area, the market was moving down. It still held the weekly demand, all right? It is still holding its weekly demand. Obviously, this is a downtrend because this was the last demand, or maybe this one. Everything got broken. This was the last weekly supply. So it's actually trying to break through the downtrend right now. But my point is that uh, any weekly demand which is holding, it can take a lot of time. So this is like 6 months. So you'll have to hold a stock through 6 months, and then maybe when the market starts going up, your stock also starts to, right. So this is why I usually uh, do not buy directly from a weekly demand. I will exit if it turns around and starts coming back, right? How much percentage do you usually aim to achieve in a month? It's not about the percentage. So if you keep thinking about the percentage, how will you take advantage of months where you can make much more than your average percentage return? So it depends on the market. You cannot look at it on a monthly basis, all right? Um, if the market is trending one way, I am looking to continuously buy more stocks, keep buying, keep buying, keep buying, right? You buy one stock, moves up 20%, you're out, you buy another stock, moves up 20% in 2 days again. So that keeps happening. So in those scenarios, you can even make 20-25% on a smaller capital in a single month or two. But the real question is, will you be able to save it when this is happening? That is where you build the outperformance. So let's say, let me make it clear for you. If the index is not moving up, most stocks won't move up. All right. So don't expect to make money trading swings in this time. All right. The index is not moving up, most stocks will not move up. This is just the plain truth. There is no going around it. All right. So how do you build outperformance? But let me also tell you, when the index is falling, you are not the only one who's suffering. All right. The entire world is suffering. So also keep that in mind. When the index is falling like this, there is something very terribly wrong going on throughout the world. So there is nothing. So this is not your basically, this won't be your primary concern during that time. And I don't mean to take this lightly, because obviously many people are affected by a big downtrend in the markets, all right? Not just in the aspect of trading, but obviously something is going wrong on a bigger scale. That is why the markets are falling down. So when the index is going up, all right, you will make money, all right? You can even make, see, from the lows the index has gone up 35%. So you can at least make 25 to 30% very easily here, all right? 30% very, very easily, even if you start buying after a nice breakout here, all right? But where will your outperformance build up? Where will you actually build up some outperformance? So let's say you started to buy here. You're buying. Index is up 15%. Let's say you're up 20%. You're very good at buying stocks. You are up 20%. Now the index is down back here. But I can tell you, you can easily avoid this fall. This fall right here, this last 6%, you can easily avoid it. All right. Easily avoid the stock, this fall. So now the index, if you started here, let's say if you started here from this time, let's say you are up 12%, maybe 15%. Let's say you are up 10%. All right. With the index, you're up 11%. But the index is only up 4% when you're here. So now you've built some gap, right? Some gap is built. Next time, what happens? Next time you start buying again, index goes up, you are again avoiding, you are maybe exiting here after a big fall. So you have made 3% in, let's say, 2 months. But the index has given you negative returns because the index starts to drop to the lows. Index has given you minus 5%. So you've again built a gap of 3 plus 5, which is 8%. So throughout the year, you keep building these gaps. All right. Hopefully, this entire thing is clear with everyone. All right. So if I'm avoiding a fall like this, let's say I'm avoiding something like this, and this is not even a big fall. All right. Come on. Who are we kidding? This is not a big fall. You've seen much worse on the small cap index right here. If I'm exiting my stocks here and I am avoiding all of this, I am basically avoiding 16-17% of a downfall very easily. All right. So again, same thing here. There is not even a single green candle before a 17% fall. So how can you not avoid this? I don't get it. All right. And you won't even find any setups because stocks are also falling, obviously. So, these kinds of falls are the easiest to avoid. All right. Maybe you buy stocks here because you're expecting a breakout. Again, you're exiting here. You don't have to wait for this candle to exit your stocks. All right. Also, I'll tell you what happens if you wait for this candle. Right. Um, what happens is, let's say you're expecting a fall, index is clearly downtrending, and you know something like this can happen. All right. But um, you don't exit your stocks, or you don't at least reduce your position size to 50-30%. All right. Now what happens tomorrow? This happens. All right. Tomorrow, for any reason, for any news, this happens. Now it has already happened. So now when your stocks are down, maybe your stocks have come down to a demand zone. All right. So now you're expecting it to go back up. All right. So now you're basically forced to wait for another candle on the downside. All right. So you could have exited your stocks here, and now you're exiting your stocks here. So treat every single move, treat every single bearish structure as the end of the bull run. All right. Every single one of them. Because if you don't treat then that way, then will take a huge chunk of your profits away. You can simply buy stocks. Let's say you are looking at this area right here. You can simply buy stocks if the market starts to go up here. You don't have to risk something like this. All right. So, be very careful about market pullbacks. All right. Basically, you have to wait for a base to form and then a shakeout to enter. It's not that simple. Not that simple, really. Um, let's take an example. Let's take this example. So, to time it properly, see what I usually aim for is a proper base. All right, where there have been some sort of lower highs as well. So lower highs, lower highs, lower highs. See, the point behind this is if there are multiple lower highs, then you can clearly demarcate the area where the stock has started to form a higher high. So, so let's say there are multiple lower highs and the stock is not falling that much. If it's falling a lot, then it's a downtrend, all right? But let's say there are multiple lower highs, but the stock is not falling that much. So as soon as it starts forming these higher highs, look at how different both these areas look. This one and this one. All right. Both of these areas look very different. So I can very clearly separate these two. Now I can very clearly separate these two. I can also very clearly find my demand zone. All right. So if the market keeps up, this thing is bound to break out. So this is the entire point why I wait for some sort of a deeper base. If it's not pulling back like this, then first of all, it's extended on the weekly chart. All right. It's extended on the weekly or the monthly, all of that, all of those charts. It's very extended. Secondly, let's say it goes up and now it's doing something like this. So, okay, let's say it goes up. Now it's doing something like this. So what's the difference between buying here or buying here or buying here? What is your differentiating factor? What are you looking for? What are the count of pullbacks? What is your count of lower highs or equal highs? Or what are you looking for exactly here? Right? So so you see the entire difference, right? You'll be forced to buy randomly. You have to buy randomly here and then wait for the stock to just go up. There is no trend inside the base. So these are very, very fine concepts which you can only get after very repeated observations, right? So and don't just go behind everything that I'm talking about. Go and experiment as well, right? Because you might find something which is working here. Maybe an EMA, maybe some sort of a lower time frame structure. So these things keep evolving. Don't take my word for whatever I'm saying. But the logic is there is nothing different about this high or this high or this high in this entire range. Hopefully it makes sense to everyone. Right? So so the entire point behind going for a deeper pullback is I can get very distinct areas inside the base like this. All right. So you see something like this. It's very clearly uptrending. All right. It was pushing down. Now it's going up. So now I can expect some sort of a move here. And if it does not happen, it will simply break the demand. This will simply break this demand. I will exit at that point. Not too difficult, right? See, this is the market we are in. There are many stocks which are doing this. A lot of stocks which I have actually bought. I was actually also looking to buy this, but buy this yesterday, not today. Buy it right now. So there was an entry around maybe today morning. So you see, it's not, stocks are pulling very deep from the highs, right? In the current market environment, see stuff like this. This is happening very often these days, since the past maybe 4 or 5 days. All right. Now, obviously, some stocks are breaking out. You see stocks like this. This was also on my watch. But obviously, I don't buy stocks if I'm not confident about the index. So the stocks which are coming out of a base, they are pulling back way too deep um, in the current market. Also, guys, make sure that you are liking the video as well. All right. What is your position size? Uh, what is the position size you're taking in a low VIX environment? Um, so I don't really get. I think you're talking about the index. See, in a low VIX environment, see, first of all, it's not low compared to what we have seen 2 weeks ago. All right. 2 weeks ago, it was at 10. So right now, we are at 12 point something. So in a low VIX environment, I'm taking my, obviously, it's a low VIX environment compared to previous uh, previous times. But even in this environment, I'm taking my usual position size. Nothing has changed. VIX is increasing, but actually, if you see, the volatility is not, it's not there. This is not volatile by any means. All right, 300-point range on an hourly chart is a joke. So the position size is same, but I'm being, I obviously, I be very careful about okay, position size for swings. All right. So position size, it depends on the market trend. If I feel that tomorrow it can gap down, so if I start, if the close happens in a way where it closes here and tomorrow it can do this, I will be out of. So if I'm holding 5 stocks, I'll be out of 3 minimum, especially if they're already giving me some gains. I'm not a long-term trend follower. No, by no means I am a long-term trend follower. So see, I've seen stuff in the small cap index which makes me scared of a small cap fall. All right. When you see these things in the live market again and again, you see these things in the live market, small cap index falls like this on the 5 minute chart. Not even a single green candle. All right. So if I show you an example, this is the, how do you open an index? All right, we'll check this out. But the point is, when it starts falling, it will fall like this on the 5 minute chart. No pullbacks, no nothing. So I don't want to be a part of that environment at all. All right, so as soon as I get a hint of any sort of um, any sort of fall, I will start scaling out very fast. I can simply re-enter. It's not a big deal. Nifty small cap, all right. Yeah. So let's just make it a bit better. So even during this time, let's go to 13th March. All right. So to answer your question, I do not wait for a big fall uh, to exit positions. All right. I'm very careful with what I'm buying. So look at this. I don't want to be a part of this fall. This is a I mean this is still better from what I've seen. Let's go to an entire downtrend. Right. So look at this area right here. Okay, just a second. So look at this area right here. This is what I was talking about. Simply nothing. All right. So be very careful. Be very, very careful. Accounts I see. I don't. So I buy a lot of stocks at once, right? I will buy 10, 15 stocks at one. I will be holding 12 to 15 stocks at one time. So I simply buy less stocks. When the market is starting to drop, stocks automatically start falling. So the setups are automatically less. So you see how that works because I don't want to adjust to new position sizes again and again, right? If I'm used to taking, let's say, a risk of, uh, let's say, 10,000 rupees per stock, all right, uh, I cannot take a risk. I cannot take the stock seriously if I'm only taking a risk of 3,000 rupees. Hopefully that makes sense. It takes some time to adjust, for especially for me, all right. So I simply cannot go down to 3,000 immediately when I see a bad market. I will just not buy so many stocks. All right. I won't buy multiple stocks that affect my portfolio. I will pick the best sector. I'll pick everything very, very um, precisely. All right. But I don't reduce the percentage risk because that simply I cannot adjust to it very quickly. All right. Uh, okay. So Senko Gold, we have talked about it. Senko Gold, you can hold it. Uh, but keep a watch on the index. Uno Minda as well. Uno Minda, see again, same things are happening. Sharp pullbacks are playing out. So if you bought somewhere here, you should be out here. This is not a market where you can hold it. Even if you are okay, so let's talk about another thing, and then we'll end the live. First of all, if you haven't liked the video, please like the video. So, so what happens here? Let's say you bought a stock here. Let's take a better example. Okay, let's take one of my trades. So let's say I bought a stock. I bought this stock somewhere here or here. All right. Um, so this is where the stock is right now. I'm just talking about my exit point. So I exited somewhere around this part, somewhere around this area right here. All right. Now, if you wait for a higher high, you see the amount of days which you are giving to the stock. So if the stock is not continuously making progress, I will exit very quickly. All right. Because if you give a lot of time to the stock, you're also exposing yourself to the market risk as well. You're exposing yourself to the market risk. So, see, it's been how many days? 24th July, it's almost 24th August, right? It's been 1 month, almost there. And until now, the stock is below my exit point. And I've bought multiple stocks after it. They have also gone up 20%. So, my entire point is if it's far from the 50 DMA and it is moving up like this, just exit the stock. All right, just simply exit. You will miss out on maybe a big move, but most of the time it will come back down and you can buy again. All right, so it's also extended from the 50 on EMA on the hourly chart. So overall, it's just a bad place to keep holding stuff, right? Same happened with Uno Minda, especially in the current market where the small cap index is also extended. See here, now to go back above this high, it will take a lot of time. All right, eco recycling. Let's talk about this and then we will end the live. Make sure that you have liked the video as well. Again, what? This is too far up. Don't buy this. This is not a contraction. It can go up, but this is not a contraction. All right. Don't buy this, please. All right. So we will stop here. I will see you guys again. And you can, in the comments, you can suggest what videos you want to see next, right? In the comments of this video when it gets posted. So we'll stop here and I'll see you guys again. Have a great weekend.